Hello everyone and welcome to the weekly market update from ICM.com. We're going to start by the coronavirus update and then highlight the key economic events and releases for the coming week and then go over some of the major charts on the MetaTrader 4 platform. So first, let's start with the latest from coronavirus. Recently, the risk sentiment in the market was hit due to a significant surge in new confirmed cases around the world, especially in the United States, triggering fears of closing the economy one more time. The new confirmed cases surpassed 10 million, with the US recording more than 2.5 million cases. The recovered cases around the world are around 5.1 million, while deaths crossed 500,000, with the United States having a quarter of them. Now, over the weekend, the US scored a record new rise in cases for one single day. Yesterday, at least 31 states saw an increase in numbers, 15 were almost steady, and 4 only saw a decline in new cases. Moving to China, they are trying to do whatever it takes to avoid a second outbreak. Chinese authorities locked down a province of 400,000 citizens as only 18 cases tested positive. So they don't want to take any risk as long as there are more than 10 cases, 20 cases are appearing. They are moving forward by closing, but by going for a lockdown in order to avoid any serious breakout. On the brighter side, Russia reported the lowest number of infections in 2 months, and the European Union continued to ease lockdown measures and is currently preparing a safe country list to open borders. So what matters the most is how the governments or authorities, especially in the United States, will react to the rising numbers. Some officials in states where cases rose significantly during the past couple of days paused the reopening plans and even closed businesses again. So this is weighing on the sentiment. It all depends on how authorities will react to any significant rise in cases. If we are going for another lockdown, it's going to be catastrophic on the market. We're going to see some significant impact on the equity, especially, and also the Fed will eventually be taking steps in order to support the economy and also to avoid any sharp collapse in the market, as we've seen in the past couple of weeks and even since this pandemic started. So also market participants will have to monitor this week the Brexit negotiations and whether the European Union and the United Kingdom will be able to secure a trade deal or not. So they are going for almost 5 weeks of consecutive for 5 consecutive weeks of intensive talks and in order to try to reach a trade deal which would be good for the two parties. This is already having an impact on the pound. We've seen the pound weakening lately amid talks that the United Kingdom is currently is not happy with the stance of the negotiations and could walk away without a deal. So this is for the Brexit negotiations for the week. We've seen increased volatility in pound pairs. We've seen the rally, a recovery in pound earlier today. However, the pound couldn't hold these gains, and we've seen a drop again against some other major currencies. Now let's move forward to pinpoint the top economic releases for the week. Tomorrow we start early with China manufacturing PMI, expectations of a slight drop but still above the 50 level. So showing that the Chinese economy the activity in the Chinese economy is almost back to normal following the impact of the pandemic. So expectations of a reading above 50 is still better than what we've been seeing lately. Also moving to the United Kingdom, the final reading of the first quarter GDP, expectations of a contraction of 2% versus reading of the fourth quarter of 2019 of only of a no growth or a 0% change. From the Eurozone, we have the consumer price index year over year for June, expectations of a rise by 0.1%. Canadian GDP for April consists of a shrinkage in economy by 12%, showing the impact of the COVID-19, of course, on the Canadian economy in April. Also, the CB consumer confidence from the United States of June, a nudge higher towards 91.7 from 86.6, as we've seen a little bit of restoration of confidence during the past couple of weeks as things started to get back to normal ahead of witnessing a rise in cases again. So also, one of the key events of the week, the US Treasury Secretary Steven Mnuchin and Federal Reserve Chairman Jerome Powell will be testifying before the House Financial Services for the second on the response to coronavirus. This is the second time they have a testimony on the response to coronavirus. any talks about the future path of monetary policy by Powell could have a significant impact on the market. Also, he might be giving some hints on how the Federal Reserve is following up on the recent rise in cases and how would the Fed react. So this could have a major impact on the market. And we end the day with the American Petroleum Institute crude oil stock. On Wednesday, also we start with China with the Caijin manufacturing PMI from China, expectations of a slight drop also to 50.5, still above 50 level, which is which should be good for the sentiment. Moving to the Eurozone, the German retail sales expectations of a pickup of 3.9% in May. The final reading of the manufacturing PMI in Germany, Eurozone, and the United Kingdom will also be out with no change from the preliminary reading that we saw last week. The German unemployment change to rise by only 120,000, less than a previous reading of 238,000. Also, this is a result of things coming back to normal and companies reopening again. So this is from Germany. The private survey of non-farm employment change, ADP non-farm employment change expectation of expecting a job creation of 3 million. Also the ICM manufacturing PMI expecting a surge to 49.4, almost back to expansion or to the 50 norm. So this should be also this should have an importance, especially if we got the reading above 50, which could have a little bit of a positive impact on the market. Also, the weekly crude oil inventories or the weekly crude oil report by US Energy Information Administration, and finally the minutes of the last monetary policy meeting by the Federal Reserve. On Thursday, it's busy too. We start in Europe with the producer price index. Month-over-month expectations of a drop by 0.5%, less than the prior change, and unemployment rate is to tick higher to 7.7 from 7.3. Moving to the United States, the initial jobless claims, weekly initial jobless claims expectations of a rise by 1.355 million. The total number of those benefiting dropped last week below 20 million, which has also seen a little bit of positive indication of the labor market. The jobs report will be released on Thursday instead on Friday, as the United States Independence holiday is observed on Friday the 3rd of July. So the average earnings index is expected to shrink by 0.7%. The non-farm payrolls also expectations to show a creation of 3 million vacancies or 3 million jobs in June, and the unemployment rate is expected to drop towards 12.3. However, also investors should be looking for the revisions for the unemployment rate, especially the prior reading of their last reading had some misclassification errors. So this should be also important reading for investors. The trade balance from the United States deficit is expected to rise by almost 4 billion to 53 billion. And the Canadian trade balance deficit of 2.5 billion. US factory orders expectations of a jump of 8.6% in May versus a contraction or a significant contraction of 13.6% in April, and we end the day with the Baker Hughes oil rig count, which last week only changed. We've seen only a drop by one count. It was 189 and dropped to 188. So we aren't seeing any more a drop in production or a cut in production in the United States for the recent weeks. So this is for Thursday. Moving to Friday, it's a bit shy with the May retail sales from Australia jump by 16.3% expected. The Caijin Services PMI in China a slight drop to 53.8 versus 55 previously, and the final reading of the services PMI in the Eurozone and the United Kingdom showing no change from the preliminary reading, so 47.3 and 47 for the Eurozone and the United Kingdom respectively. So this is for the economic indicators or economic releases for the week. We're going to move forward to the MetaTrader 4 platform to go over some of the major charts. So let's start with the Euro Dollar. So recently we've witnessed for the past since the pandemic has started, we've seen this sharp rise, and then we've been in this consolidation pattern for the past 4 weeks or past 3 weeks. It's more clear on the daily chart. We had this rally to the upside, and currently we've seeing lower lows and lower highs and we're consolidating inside this this channel. So if we go for the hourly chart, and then we can draw here pattern that we are currently trading in. So we're trading inside this channel as investors await fresh fundamental drivers. Nothing is happening uh, on the monetary policy side. Nothing is happening. No market movers are affecting the market. Investors are focusing on how the governments will react to the latest developments of the coronavirus, and whether it will impact again the economic activity in the Eurozone or also in the United States. We've seen the Eurozone is in a much better state than the United States lately. So this is for the euro dollar. We're trading inside this channel in order for things to get a little bit more positive for the euro dollar. We need to clear above this channel, and also which could also coincide with with this resistance level of 1348. So this is a key level. We have the top of the channel, which is currently around 1.1315, or around 1.1310 and 1.1320, and again 1.1350 in terms of resistance ahead of the key resistance area of or level of 1420. This is for the euro dollar from the upside, and on the downside support zone could come in at 1192, and at the bottom of this channel, which could come in at 1125. So these are the key levels to watch out for if you are trading the euro dollar. These are the key levels. If we go for some of the top indicators, we can see here that the Bollinger Bands were wide earlier today, and when the bands widened, and also we've seen here a little bit of a divergence in the RSI, between the RSI and the price. We've seen a recovery, and the price is currently trading near the 100 and 200 hour exponential moving average, also the 20 simple moving average, which is the middle band of the Bollinger Band. So currently we are near the pivot point. So this is for the euro dollar. If you're trading the euro dollar, let's move to the pound. Okay, so also the pound, we've seen similar formation to the euro dollar. We have also this channel here. We're trading inside this channel. So one of the key movers for the British pound, as we said earlier, is the negotiations for Brexit, the Brexit negotiations, and how things will go. So and in order for things for the picture to turn a little bit positive, we need to break above today's high, which is almost around 2390, in order to have a little bit of a better move or a better rally towards 2550 level. And on the downside, we need to watch out for any break or any drop to the bottom of this channel, which could coincide with the previous lows here near 2170 levels. So watch out for these levels ahead of the key low near 2070. So these are the key levels if you are trading the British pound. So these are the key levels if you are trading the British pound against the dollar. From the bottom 2170 and 2070, and on the upside 2390 and 2540. So this is for the British pound. Moving towards the dollar yen. We're seeing a rally in the dollar yen in the past couple of hours. The dollar is rising against the yen. Mainly, we haven't been seeing like a very significant move in the pair, since both currencies are benefiting from demand for safety, and when the risk appetite is improving, we're seeing that investors are dumping these two safe currencies. So this is for the dollar yen. If we go for the weekly chart, we can see that we've recovering a little bit from the losses incurred during early June. If we go for the daily chart, we're seeing a pretty good move today, but still we are trading on the bigger picture. We are trading inside the range that we spent most of the time in the past 2 months, and trading in 108 and 106. So most of the time we've been trading inside this range. So watch out for the upside on 1810, and again at 109.84, and from the downside we have the 106 level, and again 104.30 or 104 level. So this is for the dollar yen. If you are trading the dollar yen, watch out for these key levels: 108.10 and 109.85, and from the bottom 106 and 104.30. The commodity currencies are all also moving the same. They have the same consolidation level, the consolidation formation that we witnessed on the euro and the pound, but they are more firm, a little bit firmer. So we've seen the pound is a little bit worse due to due to fears of the coming Brexit negotiations, the euro dollar is almost sideways down, and the commodity currency is almost consolidating inside the same range. So if you're trading the Australian dollar, watch out for any we've been consolidating since Friday inside this almost rectangle between 68.95 and the bottom, which is today's low of 68.40. So watch out for any break. We've been trading inside this 50 pips range for the past two sessions. So watch out for any break above the 68.95 could lead towards a move higher towards 69.70 ahead of the key level of 70.50, and on the downside, any break below 68.40 could trigger further downside towards 67.76. So this is for the Australian dollar against the United States dollar. Watch out for this key support zone, since the New Zealand dollar, which is also moving with the Australian dollar, we are trading near this low, and also the Canadian dollar is moving near this high. So the Australian dollar is a bit better than the New Zealand and the Canadian dollar, but watch out for any break below this level, which could trigger further downside towards 67.70. And the Canadian dollar here, as we said also, if we go for the daily chart here, so if we go for the daily chart, it's clear also that we've been trading inside this channel. We had this move lower and then consolidation, then another leg lower, which formed also this channel. We are trading currently at the top, near the top of this channel, awaiting some fresh drivers. So watch out how the price will perform near the current levels. If we go for the hourly chart here, we can see a little bit of a consolidation. Watch out for any break above today's high of 37.20, which could also lead towards a further rise towards almost 38.60 level. So these are the key levels on the upside if you're trading the USD against the CAD, and on the downside, any break below 36.20 could trigger further selling towards 34.80. So we are currently trading inside this range here, and any break above the previous high could lead towards a rally towards 38.60, and then any break below the lower bound could trigger a drop towards 34.80. So this is for the USD against the Canadian dollar. Here we can see that the price is also moving above the 100 and 200 hour exponential moving average, and the Bollinger Band is currently opening with the RSI holding above the 60 level, which is considered a little bit bullish. So this is for the USDCAD. Let's move to the New Zealand dollar against the US dollar. So this is the key level that I was talking about while hinting to the Australian dollar. We retested this level here again near 63.80. It's a very good support zone, so watch out for any break below this zone, which could accelerate the move to the downside towards almost 62 level, 62.30. So these are the key levels on the downside if you are trading the New Zealand dollar against the US dollar. And on the upside, first we need to clear this minor or interim support, interim resistance near 64.50, which could open the way towards a leg higher or a rally higher towards 65.30. So also as for the Australian and the Canadian dollar, we're trading here inside this consolidation zone. Any break above could trigger a rally towards the previous high, and any trade below could lead towards a drop lower. Maybe we could be retesting the bottom of this channel. So here we have this top, bottom, top, and maybe if we can break below 63.80, the prices could rally lower towards 63.20. Watch out for the New Zealand dollar, especially if the risk sentiment gets hit, and again with any updates concerning coronavirus. The commodity currencies are being so sensitive to risks. So this is for the New Zealand dollar. Gold prices managed to close on a stronger note for 3 consecutive weeks. We've seen 3 consecutive weeks of gains for gold, and currently we're trading near the highest levels almost since 2012. The high was around 1779. Currently we're trading almost near 1770. If we go for if we can see the prices are a little bit extended over the 100 and 200 week exponential moving average, but still we can retest the top of this Bollinger Band in case we hear that the Federal Reserve could consider more stimulus, or the White House also could be considering further fiscal stimulus to brace for the second wave of coronavirus. So this could have another impact on the market. However, we have to watch out for any sell-off in gold, as investors could be seeking liquidity, similar to what happened back in March. So this is a key a key like a confusion for gold. It's benefiting from the prospects of further stimulus, but also the need for liquidity uh, sent gold tumbling back in March. So this is what you should be watching out for if you are trading gold. As we go for the daily chart, we see also the prices are above the 100 and 200-day exponential moving average, above the 20 simple moving average, which is also the middle band, which is the middle band of the Bollinger Band. Uh, we're trading above the previous high of 1764 also, so watch out for the first sign of reversal could be any close below 1764, which could also lead to a further drop towards 1744. I'm going to show this on the hourly chart. You can see here that the price is finding support near the 200-hour exponential moving average. So any break below this level could lead towards a drop lower towards this level here near 1737 or the previous high of 1744, which was also a tough resistance on the way up. So it could turn to be a strong support. Watch out for this level here. So if you're trading gold, the key levels to watch out for 1745. Any break below 1745 could open the way towards further downside towards the 1700 level. So watch out for any break below 1745. And if the prices were able to break above 1780, maybe we could open a rally towards 1826, which we were talking about a minute earlier. So this is the key level for these are the key levels if you are trading gold. If you want to go for some extensions, if you want to check for some extensions for the recent price of the 23.6 level, also could come in at 1796. These are the levels that you have to watch out for gold. So if we go for the 23.6 extension or the 123.6 extension, for the recent swing from 1704 towards 1779, we get the level of 1797, which is ahead of the 1800 psychological level. So watch out for these levels if you are trading gold. Moving to silver, we've been stuck inside this consolidation range for a while. So here we have this trend line. We're trading near the trend line. We found some resistance near this trend line, and also on the downside here we have this mini trend line, interim trend line here, and also ahead of this big line of the triangle. So we're trading inside this consolidation range. Nothing much is happening on the silver. In order to have a little bit of positivity, we need to clear above 18 or to close above 18, which could open the way towards 1840 and also further rally towards the 19 level. And on the downside, any break below 1740 could trigger another drop towards 1688, 1690. So watch out for these levels if you are trading gold. We're trading inside these trend lines, the downtrend line and uptrend line. We are consolidating inside this range, and the range is closing in, so watch out for any breakout. And silver, moving to oil, we've seen a little bit of a drawback recently as investors are afraid that a second wave of infections could weigh again on the economic activity and could draw back oil demand levels. That's why we've seen a drop in the past couple of days. Over today, we're witnessing a little bit of recovery now. If we have closer look on the hourly chart, we can see that the price is bounced exactly from the trend line. The trend line combining the recent lows. So so watch out for any break below this trend line, because any break below this trend line could trigger further downside towards 3470 and the bigger support zone near 3050. So this is on the little bit of a bigger picture. And on the upside, any break above this interim resistance level near 3930 could be positive and tackles a further upside towards 4056 and the previous high near 4160. So these are the key levels. If you are trading oil, watch out how the price will react to this trend line again. So maybe if we break below this trend line again, we could see a further the sharp drop. So maybe here we have this drop here and then another consolidation, maybe another leg lower. So watch out for how the price will react while approaching this trend line again. So this is for oil. Moving to the Dow Jones. So the Dow Jones here, we're gonna have a first look on the weekly chart. We've seen the drop last week. As we said, the rising coronavirus cases are weighing on the sentiment. On the daily chart, we can see here that we are trading below this trend line here. So any break above this trend line could give some more positivity, but also we need to have less increase, or the rate of increase in coronavirus cases should decline a little bit to give investors more confidence about the stock market. So watch out uh, for this trend line. And on the bigger picture also, if we go for this formation here, we are trading also near inside this channel, and we found support exactly near the downtrend line, the trend line, the uptrend line that was combining the lows in early in April, the 2nd of April, and the drop on 14th of May. So watch at how the price could react when we approach this trend line again near 24,700. So we are stuck inside these two trend lines. Here we have a series of lower lows, and here we have a series, on the bigger picture, we have a series of higher highs, but also here we found support near this trend line. So watch out how the price will react near any of these trend lines, since if we can break above this trend line, it could give some positivity, and maybe we could rally towards 26,300, and any break below this trend line here could trigger further downside, and the first wave could lead to a move lower towards 24,078, and again 22,645, which was a key support ahead of this rally to the upside. So if you're trading the Dow Jones, watch out for these key levels here: 24,070, and on the bigger picture 22,600, and on the upside any break towards 26,300. So watch out for these trend lines, draw these trend lines, and monitor them, and any break could give you more hints on how to perform or how to execute your trade. So this is mainly it for today. If you have any questions, please write them down. But first, I'd like to remind you that all the information, analysis, opinions mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instruments. So these are only for educational purposes. We are just trying to help you how to analyze the market, to see how we are doing this analysis, the classical technical analysis, by using the trend lines, the channels, the previous tops, previous bottoms. So in order for you to do your own analysis. So this is it. If you have any questions, please write them down. So if you have any questions, please write them down. I would just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. Perfect, sir. You are welcome. On Wednesday, every Monday, we are holding this week ahead, and on Wednesday, we are having educational webinars. Okay, perfect. I believe this is it for today. If you have any questions, you can send an email to webinar@icm.com or support@icm.com, and we'll be glad to help you. So this is all for today. On Wednesday, we're holding an educational webinar. Please stay tuned, and thank you.